MPs are stepping up their pressure really for RBS to be broken up into a good bank and a bad bank. This follows the recommendation of the Parliamentary Commission on Banking Standards a couple of months ago that this option should be seriously considered. And the Chancellor George Osborne pretty swiftly committed to look at it, appointing Rothschild and other advisors to examine the idea. But I think there are people on that commission who are fearful that the Chancellor and others have gone cold on the idea. The idea of creating a bad bank is something that's not original to RBS. It's been done at lots of different banks around the world at many times in history. In this case, the idea would be to hive off something between 70 and 170 billion of assets that currently sit on RBS's balance sheet and put them into a government-owned entity. So there'd be 100% government-owned. That would free up RBS's balance sheet to serve the economy more efficiently on its own.
The banks sometimes haven't helped themselves by opposing tooth and nail all change.
Andrew Tyree, who chaired this Parliamentary Commission on Banking Standards, has written to the FT really urging the Chancellor not to give up on the idea of a split. I think that signals that he and the rest of the Commission are nervous of the signals that they're picking up from elsewhere that maybe this idea is going cold. There's no question that doing this kind of split would be a very complex thing to achieve, would be very time-consuming and costly, and therefore does it make sense to do it at a time when RBS is actually recovering on its own merits, if you like, and is increasingly funding the economy. The other people on this commission, people like Lord Lawson, the former Chancellor of the Exchequer, Lord King, the outgoing or former head of the Bank of England, also had this view that RBS was not serving the nation well, that it should be split up. The basis for the recommendation was that without a good bank, bad bank split, RBS could be more constrained than it otherwise would be from lending into the real economy. However, from what we hear, the Rothschild exercise hasn't yet thrown up any serious evidence of that constraint being a reality. And I think on that basis, if that comes through into the final report, then it's going to be very difficult for the Chancellor to proceed with a split. One elegant political solution, and potentially a valuable economic one as well, would be to create a halfway house, an internal bad bank, if you like, which would essentially beef up the non-core division that RBS has currently been operating and has been operating for the past 4 or 5 years, which basically wound down at more than 250 billion of assets to around 40 billion now. Essentially, you could just ramp that up again, take it back up to 150 billion, and then spend the next couple of years winding that down. But it arguably gives people more of a focus on what they have to achieve by winding down those things, and then frees up the good side of the balance sheet to operate more effectively. Probably on balance, it's the wrong thing to do to create a bad bank right now. If Mr. Osborne had done that back in 2010 when he came into power, it could have been a good way to focus RBS's attention, send a political message that RBS was freed up to lend to the real economy. Now it looks like far too expensive an exercise, far too time-consuming a one to seriously have any real effect.